What's up guys, welcome to my weekly trading reflection, week 13. I just started a new backtesting session last week to backtest Euro USD during 2023, basically the whole year, and I just finished backtesting the whole month of February. So in this video, we'll go over all the trades I took, explain them, and I will share you my improvements so we can learn together, and also my analytics. So we'll share what I could do better moving forward and basically what I can learn from all these data. So first of all, we'll go over my backtesting lessons. First of all, premium and discount matters. I think this speaks for itself. Usually when I was backtesting, I would just start a session and immediately enter off some kind of fair value gap, but it's not in the discount if I want to go long, or it's not in the premium if I want to go short. So this is a common lesson. You really want to target these fair value gaps and not these ones, because usually you get some kind of entry model right here with a sweep, I don't know, but then I got induced into buying right here with a displacement, but then I got stopped out because I was not patient enough to let the session roll out, wait some at least to the quarter 3 of quarter 4 of the session to then enter off some trades. So premium and discount really matters. Of course, if you are in a very bullish market, you don't usually see this, but it's always better to focus on the really deep discounts if you want to look for short longs, or really deep premiums if you want to look for shorts. So moving forward, watch out for MQ. So what I mean with this is the manipulation quarter. Watch out for it, because you can catch 2 manipulation moves in that quarter. And what I mean with this, I don't know how I can illustrate this, but I noticed this in my backtesting, that let's say we have the classic AMDX, right? So we start the session with a consolidation like this, and then what we do is we start Q2 like this with a manipulation move below the lows. Then we get some kind of displacement, giving us some kind of entry model right here, and then we can target these highs. And so what happens is this manipulation, it happens at the beginning of Q2, but then you'll have this target met, this buy side taken out, and then you got another entry model right here, something like this. And then actually this was the real manipulation of the quarter. And so this is the A, this is the M, and so finally this is the distribution. So this was a classic sell model of the session. And so what I want to share with you is that manipulation can happen both ways before distributing. So it's not like one manipulation and then it goes the opposite direction for distribution. No, I noticed in my backtesting that I can just have 2 setups in one manipulation session. This one is the riskier one, because this is just the manipulation before we how can I explain this? This is the manipulation before we go back to equilibrium of this move. Usually we are in a bearish market, and this is just a move back to equilibrium, right, to the premium. And so this is a riskier setup. Of course, you want to catch this one, this setup to the low, so a short. And so this is the best one you should take, but you can also take this as a manipulation. But if you see this manipulation in the beginning of the quarter, it doesn't mean that we'll go up the whole day, right? So that's what I noticed, and I want to share with you. So after that, confirmations are always needed. Displacement order flow is not enough. So what I want to say with this is, let's say you have a lot of structure, you have a lot of nice price action, the fair value gaps are getting respected. Let's say something like this, we have a fair value gap getting respected, but we still don't have like a displacement, then don't take the trade. The displacement is the most important thing always. If I don't see displacement, there's no trade for me. Even if there's like very clear price action that we have some kind of retrace back to equilibrium, we have a stop rate, we have a retrace back to this equilibrium, a lot of good structure, a lot of good order flow. Still, usually I wanted to just take this trade just because I see such a good structure and I have such a nice narrative. But if I don't see a displacement, don't take it, because I noticed I got stopped out a lot if I just trying to predict where the market is going based on what I see is getting respected. But the most important thing is displacement, because displacement shows us where the market wants to go. And so if we don't have displacement, this can just be like a retrace back to this equilibrium to then, go back up, right? So displacement is key. That's what I want to say with this one. Then the more structure, the better. Don't need an extra entry model if I wait for that. Just displacement, good order flow. So what I mean with this is, let's say we have a setup, but we missed it. So we have a clear AMDX, and let's say we were bullish in a bullish market. So then I would just want to keep targeting the upside. If I miss this entry model, let's say I could have entered somewhere right here, but I missed it, then I can just, if there's clear drawn liquidity to the upside still, because we're bullish, then I can still enter if I see a reaction of a fair value gap right here. I don't need another sweep and displacement. A displacement or reaction of this equilibrium is already enough. So what I mean with this is, let's delete just this and this. I don't need to see like my favorite entry model, which is a sweep inside fair value gap, then a stop rate, then a displacement up, and then an entry right here. So this is my ideal entry model, right? You want to see a sweep, I mean like a mitigation inside a point of interest, a stop rate, so an internal stop rate, displacement, and then entry right here. This is ideal, right? But if I already have it right here previously in that session and we got the displacement, then I don't need to wait for this again, right? This is just too much. If I just see price entering another POI after retracement and then just a strong reaction up, I still need the displacement, but I don't need to see another stop rate, right? So this is already enough. I can see a mitigation of this and then a strong reaction up, and then after that what I can do is I can just scale in, right? So this is also something I noticed. If I have already enough structure, so if I don't have this already, this clear price action, I'm also going to wait for another entry model. But if I already have this nice structure, I don't need another entry model like a stop rate and then displacement. I just need a reaction of that fair value gap to scale in my trade. So this is mainly for scaling into winners or just entering if I miss this setup. So yeah, I would enter a market enter right here if I see a reaction of this one, right? Because mostly if you are in a good trade, you want to scale in to make your winners bigger. And so this is the way you would do it, not waiting for another entry model. I think it's just too much. The reaction, a strong reaction already is enough for me. So, of course, if the drawn liquidity is very clear. Otherwise, if it's looking like all the liquidity is already taken out with these highs, this is a risky setup, right? But if you're in a bullish market, you get what I mean. So after that, let's see. Trade management is key to avoid unnecessary losses. I think this speaks for itself. I used to just backtest, enter the trade, and then just let it play out. But I noticed that trade management is super important. And if I don't notice these little reversals, if I'm in a profitable trade, then I can just like risk my trade getting stopped out because I didn't notice that we're actually reversing in my profitable trade. So when you see bad signs, if you're in profit, just close the trade, take partials, take actions accordingly, move your stop loss to break even, and that way you will just have so many more winners and you will avoid too many losses. So trade management is key. Always take into account what's happening, always see what's happening. I don't like set and forget. I'm not that type of guy. I really want to see what's going on. If I see a sweep, let's say we're in this trade, right? Let's say we are in a long like this. I'm gonna target these highs. But if I see suddenly like a reaction of this equilibrium, I see a sweep, another displacement, I should exit, right? I should at least put my stop loss to break even. So trade management is super important, and I think you should always keep note of what's happening, where the market is respecting, what the market is not respecting, etc., right? So London is the best. I noticed, I'm gonna go over my analytics later on, but I noticed that London session is the best for my strategy because I think it's just because I trade Euro USD and it's very nice in London session. I think a little bit better than the New York. Just my personal opinion from these sessions. And then what I want to end with is I need to stop after one win for the day. Because then I will avoid too many losses. And avoiding losses is actually the main thing to be more profitable at the end of the month, right? Usually what makes a lot of people profitable is not having more profitable trades, is just having less bad trades, right? So if I cut off the losses, I will be more profitable at the month, obviously. So what I need to do is after I have one win, I should just stop for the day, because if you see right here my backtesting during February, you'll see that we have a win and a loss, a win and a loss, a win and a loss, a win and a loss. And yes, as you can see already, I am profitable with this, but if I just cut out the losses, so if I stop after the win, I will be much more profitable and I will have a way higher win rate and so much more profitable at the end of the month. So one win in the day I would consider to stop trading. But I will see, because this is just 1 month of backtesting, so I will just see what I will have from data in the next months in 2023. Then focus on one pair. A lot of people, they saw my video of my strategy and they said like, this is an amazing strategy, but maybe it's too much concepts together, too many pairs, etc. I do agree with the pair. I don't agree with the strategy is too complex, because it makes sense to me, of course. You guys see the strategy as something crazy, too much information, but I'm trading with this for a lot of time, so it just makes sense to me. What I do agree with is I have too many pairs I need to focus on. So what I'm considering is, like, I just backtested 1 month of price action, and you guys see that I made 10% with only one pair. So actually I only need one pair. If I just focus on one pair and cut off all the others, then I think I will be more relaxed. I don't need to hurry to watch all the pairs, what are they doing, because I think that will give me a lot of losses to just watch everything. And I think if you end up watching everything, you will end up watching nothing, right? That's like a saying that if you focus on too many things, you will focus on nothing. And so I think having one pair will be much nicer to just focus on, to master that pair. And yeah, I can find setups every day, so I don't know why I need multiple pairs. So yeah, this is just another thought. Maybe I'll focus on one pair. Definitely I will make my list much smaller, because it's just too much pairs I will be focusing on. So yeah, that's basically it. Let's just check what my trades were. So as you guys know, I take a maximum of 2 trades in a day. So you'll see that I only have a maximum of 2 trades in a day. So that at the end of the year, I will see how much percentage I can actually make using this trade and risk management. So 0.5% per trade also. So let's go over the 1st of February. I will go over very quickly over these, because a lot of trades. Let's see this one. So Forex replay is amazing. This looks so good. Whenever you're just entering a trade like this, let's say you're backtesting, what you need to do, click on this, place order, save and journal, and this way it will pop up this window and you'll have the option to just attach your images. You have to make your checklist before this, but then you can see your checklist and you can check everything off and take some notes, so that way you can just afterwards look at this journal, click on every trade, view, edit or delete them, and yeah, just do what I'm doing right now, reviewing them and learning from our mistakes. So this trade, for example, what I do with every journal is I take a high time frame screenshot, then I take a low time frame screenshot, and then I take a screenshot of the outcome. I think this works the best. This trade was a clear draw on liquidity to the upside. You see, we are in this very bullish market on the hourly time frame. So what I want to see is this buy side getting taken out before then going back to equilibrium. So I think this draw on liquidity is very clear. So that's why I have this target. It was a New York PM session, which is not good. I said I don't like trading the beginning of New York PM, but this is what it ended up with. We have like a retrace back to equilibrium. We have some kind of minute 15 point of interest. I think it was a breaker block. We have a sweep plus an SMT. We break the high that brought us to our last sweep, and then we got a little candle down, retrace back to equilibrium. Then we got a candle up again, and so I thought we're ready to go, right? And so this ended up being a not a nice trade because it was right before news. I should close. This is what I mean with trade management, guys. You see we go up, I'm in profit, we have a sweep, we have a displacement. This is when you need to close. So that's what I did right here, and this is how you avoid unnecessary losses, right? I think this was still a win. I don't know what this candle is. It's just news. It's not recommendable to trade then. So I should, yeah, but I don't know when news happens on backtesting. I still have to figure it out how I do that. So yeah, just don't trade with news, and don't try to trade a PM session. I don't like it. But of course it's just one trade, so I can't say really much about this. Next trade was this one. Let's see. We have on the hourly time frame. This is my go time frame for high time frame. We'll have, let's see, a beautiful trade. Waited for enough order flow confirmation. I entered in mid London and I let it play out through New York because it was a clear market maker buy model in my eyes. Don't fade the hour or the 4 hourly candlesticks. Don't force reversals if you see a sweep and a break of structure. Just sit on your hands and wait for kill zones and enough structure to see what kind of blah blah blah. Okay, so I just explain this like this. I see a clear market maker buy model right here because we have a clear pivot right here. We have the drawn liquidity right here, which is the original consolidation. And so yeah, this is just a clear buy model to me. This is a continuation trade to target the original consolidation of this whole buy model. So we have the sell curve and we have the buy curve. Then inside the session, it was London session. What we got right here, AMDX, right? What you see right here is you have just some choppy price action and accumulation. Then you will see a manipulation. We have the true open right here and we sweep this low, and you can see why some people get stopped out using these 90-minute cycles, because they don't know what the bias is. And because I know that we are bullish on the hourly time frame, we have this market maker buy models. This is why bias is key. Then I'm only looking for manipulation at the lows, right? A lot of people, they will see the manipulation at the highs right here and they will be like, oh, this is the manipulation, now we go down and distribute lower. No, because I know I'm bullish, so I'm looking for a sweep at the lows. And so we got that right here in Q2 of London session. Also got an SMT, and then afterwards we got a displacement, breaking through this high, and then yeah, I just waited for price coming back to equilibrium, respect that, have a reaction, and once I got that reaction, I got enough structure, enough conviction about this trade, and I just enter, right? So a beautiful trade. You see beautiful AMDX of London session, and yeah, just keeping that high time frame in mind, right? Next trade is this one. Let's see. I need to go much faster. The draw plus the equilibrium and fair value gap fill up. You'll see if we are having some weakness right here, my next round liquidity will be the equilibrium right here, because we know why markets move. They move from liquidity pool to liquidity pool, then to equilibrium, to fair value gaps, or to take out buy or sell side, right? In this case, we probably took out some sell side right here. Oh, sorry, buy side. So now my drawn liquidity is this fair value gap. So what we got right here, clear drawn liquidity, which is this fair value gap fill up. What we see on the lower time frame, we have the true open, again a sweep above the true open, a displacement, a retrace back, a sign that we're reacting off this level, and so I enter right there, mid London session, 9 a.m. London time. So perfect to just yeah, target the fair value gap, right? And so I don't know what this trade ended up. Beautiful trade, nice, yeah, just textbook setup, right? An AMDX, I think, or this is the whole D, but you get the point, right? We have a point of interest, which is I don't know, the point of interest was something here, I think a fair value gap on the minute 15, and so we got that mitigation and also a sweep of this high. So this is enough for me. We are clearly bearish because this high time frame, yeah, just looked very bearish. Then next up, I don't know if I'm gonna keep on going all of this because these are 40 trades. I'm not gonna do all of them, otherwise this video will be a film. So what I will do is just give you a general idea of how these trades work, and I'm not gonna show everything. If you want them, just let me know in the comments. I will make a separate video. Yeah, I'll just give you the main ideas on how I trade this. So this is a trade I just had. This is a loss. Let's see what I did wrong right here. So this was a bad trade because I was bullish and this didn't play out well, and I know what I did wrong right here. We have some kind of weakness, so again, like the last trade, I can expect price to retrace back to equilibrium, to this fair value gap, to fill it up. And so I just was bullish for the reason that we entered this fair value gap, we got an SMT, a displacement, and then retrace back to equilibrium, and then some strength again. So I entered right there, target this, but looking at it, this was not a good trade indeed, because like this is not a clear sweep. I really want to see a sweep right here and then maybe an SMT on the other pair, but also I noticed later on that we have the true open somewhere right here, and basically this move was just a move above true open, and so it's an ideal entry for shorts. So the bad thing about this trade is, yeah, just a bad bias. Everything just starts with the bias, right? If your bias is wrong, you'll see confirmations on the opposite side of the bias, and so you'll get stopped out quickly. Yeah, so for this one, not a clear sweep. I didn't notice the XAMD or AMDX, and so that's why I didn't have a great bias, and yeah, I should notice that. Let's see, this was 2 losses on the 3rd of February. The first one is this one. We had a retrace back to this hourly fair value gap, then we go down. This big wick, as you guys know, big wicks hold a lot of liquidity, so that was my drawn liquidity. What do we see right here? We have this point of interest inside the premium. We got one sweep into it, and then a big displacement. The sweep was above the true open, so this was seen as a manipulation for me, and so I entered right there around the quarter true of the London session. And so what happened is I got stopped out, and the reason for it is because I didn't wait. Again, look at my improvements. That's why I wrote it down right here. Premium and discount matters, right? So here I didn't take note of this because as you can see right here, where is it? Yeah, so right here I entered because price just tapped this premium fair value gap, but I really want to see a clear sweep, at least of the equilibrium of this fair value gap, to class this as a manipulation. So that's what I didn't do. We ended up getting a bigger move, all the way filling up that fair value gap, and after that we get the move I wanted, right? So I really need to have at least a stop rate, because I didn't even have an internal stop rate, which is actually required, so I didn't follow my plan, and I really want to see it really mitigating my my point of interest, right? So what you see right here, no internal stop rate, poor point of interest mitigation, expecting price to go higher into premium first before going to the draw. We're also still in the manipulation quarter, so risky trade. So I really want to wait for that manipulation quarter to play out, and then afterwards you see distribution. So in this case I entered, if you can see it right here, I entered just when the manipulation phase started, so we can still get a double sweep, right? So that's what I want to convey. Make sure I understand very good why markets move. So it moves to equilibrium, to buy side, to equilibrium, to buy side, and so yeah, that's what I need to note, right? I want to see it going clearly to equilibrium and not just a little sweep. Of course it can play out, but not the best setups. Then the other loss was this one. So this was actually the same trade ID, to be bearish. After I saw that we got stopped out and displacement, I entered again of this equilibrium after I saw some reaction, again above the true open. But you see, like, these bad trades, I got stopped out in this one, and these bad trades, you can see that they're always when I don't check all the boxes. So this is why you really need to follow your trading plan. We didn't have an internal stop rate, we didn't have a 90-minute cycle confluence. I just saw good structure, but that's not enough. Right, so also the main thing right here is the move already happened. Don't just force the market to go again lower. Okay, maybe if the bias is still bearish, but if the drawn liquidity of the distribution is already taken out, then you should be careful, right? Because then this can happen, right? We go to the other liquidity pool because markets move from liquidity to liquidity, and yeah, this was a bad trade. So these were all the bear trades. I know there's a lot of other ones. Let's just cover 2 other bad trades and then go over the best trades I took. This bad trade was like this. You see, just following the hour for price action, we are very bearish right here, targeting the middle of this fair value gap. This had a lot of boxes checked. What we got right here is we respected from this hourly fair value gap really nicely. The confirmations were like this. We had a lot of accumulation right here. Then we got the second quarter to be a manipulation. So this is an AMDX. We went above the midnight open, which is ideal for shorts. Also above the true open. We wicked inside this equilibrium, inside this fair value gap. We got a move down. So now I can expect the distribution to happen. What happened? I don't know why I don't have a photograph of the trade playing out. I think I forgot it, but this was a stop loss because you really have to wait for the manipulation quarter to end, because it can maybe sweep into the beginning and offer you a move, but it will be a small one. So that's what I talked about earlier, right? You can catch the first manipulation to that equilibrium, and so most likely if you play this, you'll catch the manipulation move sweeping into some premium discount POI. Now the real manipulation, like I said earlier, happens then we distribute lower, right? And so we didn't get a stop rate or SMT, and I still entered. I was liquidity here because simply the manipulation quarter was still going on, right? We can still get another sweep of this, and I think that's probably what happened. We also don't have a clear displacement right here. This is not a clear breaker structure. We really want to see this low getting taken out and then some kind of entry of this breaker block or fair value gap. So this is what I noticed. Don't just enter if you don't see displacement. Wait for the real manipulation to end, which is around 3 a.m. London time. And for New York, it will be 9 a.m. Yeah, and mostly after 3 a.m. and 9 a.m. you'll have the big manipulation already happened if you are in an AMDX, right? I'm not talking about a XAMD. So let's go to the other loss. Let's see. Oh yeah, this was after I saw the sweep of the previous trade, and then I entered right here. This was loss 2 because I also didn't wait for the displacement. I really want to see displacement below this low, or ideally below this low. And so this didn't happen right here. And yes, it can still play out, right? We got another sweep stopping us out, being the liquidity once again. I think this was just a really scam pump. But at the end, it will still be an AMDX, right? So we'll have these borders, these boundaries of 130 to 3 will be the manipulation, and 3 to 430 will be the distribution, and then 430 to 6 will be the reversal. These are all boundaries, right? I don't have to be like, it doesn't have to be like precise, right? The manipulation can still be at 315, right? And that's what happened right here. So I think this was just bad luck. Losses are part of the game, but I noticed this a lot. You should not always look for a reason why you were doing something wrong. It's just nice to accept this is a loss, this is part of the business, go on. So this is a clear AMDX, but I just got stopped out. I don't know if it was my fault. I think it was because I didn't wait for displacement. Other than that, this was just bad luck. But I want to give myself accountability, so it's my fault. So let's go over the good trades, actually, the A+ setups of this month. So let's just go over one of these trades. View. We are very bearish, so no need to long. You don't want to long this kind of price action on the hour 4 time frame. What do we see right here on the hourly time frame? Also bearish. Then what we see on the minute 5 time frame, we start the session, the London session. We build up a lot of liquidity. This is the A. Then of the second quarter, we get a sweep of this inside a minute 15 fair value gap. Then we got a nice displacement, right? In this case, we have a displacement, so a good setup. The manipulation that happened also above the true open, so this looks very, very good. We are bearish on the high time frame, so I entered right here. This is the low that we want to target because this is the market maker sell model original consolidation, because this was the pivot. It was basically like, just going back to equilibrium before going down. So that's like this big move, I think. And so this is a clear AMD. An X should also go lower. So this played out perfectly. Nice little trade, super clean AMDX, like I wrote down right here. don't be scared that we will get another manipulation around the end of the manipulation quarter 3M. If you have a nice structure, so if we have a really nice point of interest getting mitigated stop rate, you should not worry for another manipulation, right? Especially because you have this displacement. So once you have the displacement, I like to think that the mitigation is over. So the manipulation is over if you see a really good displacement. In this case, this is a really good displacement. I like to see them on the minute 5 time frame. Is for me the best time frame to look for a valid move towards the bias. Another good trade, let's see, view. Yeah, so this is a really nice one. This is why I like to class the hour 1 and the hour 4 as my daily bias, because the hour 1 and hour 4 candles give you so much information, right? We have this hour 1, hour 1 low. We get a sweep of it during London session, and then a really good displacement. And so on the lower time frame, you'll see that we basically just have an just an AMD, right? Some accumulation, some chop. We get a manipulation below the low. So this is my point of interest, just sell side, and I think it was inside some big fair value gap. We get a displacement right in the middle of the London session. And so I entered once I saw this fair value gap getting disrespected. I just know that we're going for the highs, right? I have enough structure to say that this is the market maker buy model original consolidation. This is the pivot, and so I want to target this really confident setup. Yes, it can go way higher because we mostly found the bottom right here, but I don't care. I want to catch confident setups, and so that was what was found right here. Really good setup. The manipulation was also exactly below the true open. Even if we have this manipulation, we still got a wick below the true open. So this gives me a lot of structure, and that's what I like, right? Conviction in the bias, conviction in my my trading model, and so that's what I see. So let's end with a loss and then a win. So this was on the last day of February. I saw on the hourly time frame that we swept this high. We got a little move down, and then I just wanted to target this equilibrium, right? Because I know buy side is taken, most probably we'll go back to equilibrium, and then we'll see right here, right? The reason why I target this low is not because I want to be greedy. No, this is just my final moonbag target, as I call it, right? So I just see what happens around this equilibrium. If we bounce from here, I will just close the trade for like a 2-3 hour. But I really noticed that I can just target way bigger risk rewards, which I will talk about in my analytics, because I saw that I can just have way bigger risk rewards. So that's why I extend this towards this one, and I'll just see what happens right here. And yeah, if it doesn't give me any reaction, I will hold it towards this low. But I will often take out some partials already right here. So a bad trade here because yes, we have a manipulation move above the true open. Inside this really small hour 1 fair value gap, we are bearish. I expect this drawn liquidity to get taken out. And so what do we see right here? I entered. I can just see what I did wrong again. Not a valid displacement. I want to see this low get taken out before anticipating on any sell. So what happened right here? We didn't get any nice displacement. We just ripped up and took out this high again. And so again, I wrote down not all the boxes are checked. I had no stop rate and no valid displacement, so I got stopped out. There was no trade to be found here because no point of interest. It was still a continuation to complete a high time frame buy model. Don't force for shorts after this bullish hour 1, hour 4 price action. Again, right, for the previous trade, we saw from very bullish hour 4 and hour 1 price action. So there's no reason to actually look for shorts, right? You see, this is the price action we got. On the hourly time frame, really bullish. I really can't force a short right here. Maybe this could have been a short after seeing this buy side getting taken out. But if we are already retracing, there's no need on catching this move towards this maybe equilibrium, because we have this really bullish price action right here. We get a sweep, a displacement. I can't really force price going towards this low because we have really bullish price action on the hourly and hour 4 time frame. We have really bullish price action. So don't force these shorts right here. And so I played off this, and this was the win I took later on because I noticed that I need to look for longs. So this was the win actually. This was the higher time frame, right? The hourly time frame was bullish in the next session. This is where I got stopped out in the previous trade because price went up, and so I just wanted to long now. And so what do we get in the session? We got this big accumulation in the beginning of New York session. Then we got a nice manipulation, so sweep of this minute one low below the true open in the quarter two of New York session. Then we got a displacement up, took out these highs, but I was still bullish because the higher time frame, keep in mind, I want to see just a continuation up. I don't think we're going down from here because we have this big displacement, just some accumulation again before going up to complete this higher time frame buy model, right? I think this can go up really nicely in the next month. I will backtest, so that's why I was still bullish. And so what we got right here, this is what I explained with this. I don't need extra entry model if I wait after I already see enough structure. So I got enough structure right here already, so I don't need to wait for another stop rate right here. If I see price retracing back to equilibrium to a fair value gap, this is a fair value gap because it's a box I marked out, and if I see this kind of displacement, I just enter, right? And so I entered, stop loss at this low, no need for another sweep, it's just good enough because I already have this structure. And so yeah, just a confident 1 to 2R, and yeah, this was just a beautiful A, M, D, X, so the X was the continuation, right? Because we have that bullish bias in mind. Again, the reason why I was bullish is because we are inside this higher time frame market maker buy model, and I want to see price really reaching all this buy side of this buy curve. So that's basically it. I explained some trades. Now let's look at the analytics. So right now I have a 53% win rate in February 2023. I took 40 trades. And I made 11%, so I'm super happy with this because I really only need just more than 50% to be profitable, right? My average risk to reward is 2.1, which is very profitable with a 53% win rate. But the most concerning thing I saw right here is that my ideal average risk to reward is 7.51. So this actually means that my take profits could be way bigger, and so much more farther from my entry. And so I will take this into account for the next sessions to just maybe watch out for what price does after the 2 or 3 risk reward. But if it doesn't give me conflicting signs of my bias, I will just hold it, right? I will just hold it because the data is telling me that my trades play out much better. Like I can hold them for way longer. The max ideal risk to reward is 20.94, so that's crazy. So really nice data right here. Of course, this is just nothing. 40 trades is nothing compared to what I want to backtest. I really want to have at least 100, 200, ideally 500 trades, but I don't think I will get that in 1 year. But yeah, at least 200 trades this year. That's the data I want to collect. So this is just a beginning, not that good of a data, but we can at least get an idea, right? So my average trade duration is 2 hours. And then we'll see that my best days are on Tuesday, Wednesday, and Thursday, which is nice. My worst days are on Friday, which is a good sign because usually Fridays are not that good to trade. And this is my risk to reward on the whole month. A lot of good trades on the end of the month and just losses and wins in the beginning of the month. So you'll see risk management is key. If I just don't overtrade, don't revenge trade, if I keep my risk management tight, I can really be profitable with this strategy. Of course, this is with emotions excluded. So live market experience is much more important, but we'll get an idea, right? 11% in February is crazy. So I think I will just stick with one pair. Maybe just add gold or GBP USD with it, but definitely gonna shrink down my whole list right here on the right because it's just too much. And so the most trades I took in a London session, and the best profit was in London session. So yeah, I think I'll focus more on London session. So one thing I want to end this video with is a lot of people, they told me like, this is a great strategy, but it's just too much, too many rules, so we will not find a lot of setups. I do disagree with this because, of course, I know my system better than any other people, because I can just find a setup every session, right? As you can see from this backtesting data from February, you will see that I have at least one trade each day, right? And so that's because I don't need to wait for everything to perfectly align. This strategy is just a framework, right? It's just a framework, and I don't need everything to be perfectly aligned. If just the concepts make sense, and if I see signs of the XAMD, if I see signs of a market maker model, if I see signs of a POI, a sweep, it's enough for me, right? My core of my strategy is still just a strong bias, a point of interest getting mitigated, a stop rate, to be very nice setup, and then a displacement. And you'll see that every session, right? The XAMD, the quarterly theory, the true opens, the market make models, macros, all of that is just extra confluence that will class it as an A+ setup or not. But mostly I just find the setup every session. So yeah, I will just keep backtesting and keeping you guys updated about my journey. So if you like this video, just make sure you subscribe to my YouTube channel. I really like these videos because this reflection on the camera, saying this to you all guys, it really helps me just putting all the information I have in my head on camera, and so I can look back later on to see what my improvements are, how my strategy actually works. And so I will always keep learning, right? And so I hope you had some value also from this video. If so, I would appreciate a like, and I wish you an amazing day, and I'll see you in the next one. Peace out.